Welcome back to the Fundamentals series by AstroFX, and lesson 4 is the last lesson and it's making a plan with fundamentals. So day to day, so first thing you need to do every single morning is look at what's coming up. So I've got the chart here of the investing.com calendar and it shows you what's going on for that day. We've got ECB's de Guindos speaking, we've got MPC Treasury Committee hearings. We need to know what's going on that particular day, and that's why we look at the calendar every morning and we want to know what's important. So first of all, look at the calendar. What one could affect your currency? It's obviously got the currencies on the calendar, so that helps you a little bit. But then it also has the little balls there to show you which ones are going to move the markets. Are you in any positions and how are you going to manage them surrounding these risk events? What does the market think? So we've got the consensus estimates on the calendar as well. And do the key levels that you have match with the data? So this is key. So today on this particular one, when I snipped this calendar, we had the monetary policy meeting minutes up for Euro. So I was looking at euro dollar, have a euro dollar trade, and I want to basically see whether some people think they should have cut interest rates, some people think they shouldn't cut interest rates, or whether they all think that they should have cut interest rates. Now, they did recently, they added 20 billion euros a month to their QE, but also now people are thinking, are they going to move further into negative interest rates? So if they do and they want to add more to QE, then the euro is going to fall. So I'm watching out the support levels on the downside. If nobody mentions that and that doesn't even crop up in any statements, then the euro is going to move up. So that's how I mean, look at, do your levels match the data for what's coming out for the day? Now, will those levels break? And will they break based on what? So I gave you an example just now. Another example might be, let's say for example, we have retail sales data out and it's important for the States. They want to see how the consumers are doing. So they might have an upside potential or drop based on that. Key themes. So Brexit news for sterling, that could also be a key theme. Will Trump be impeached? That's going to be a key theme. Will the US and China trade deal get done? Massive theme at the moment across the market. And these themes will change all of the time. So you need to be aware of them, what they are, and how they will affect your trades one at a time. How to keep up with them. So you got lots of people on Twitter that you can look at. Live Squawk, Rand Squawk, news agencies, BBC News, they all give you ideas of what's going on. So you need to keep up with those news sources. Obviously, Everything Affects, we cover everything on there. And we got the market news section. We also have our Twitter feed. So we'll also put everything up on there for you to keep up with the key themes. And what sources to watch for news. We mentioned them all, but I'll probably say Live Squawk is the main one. Matching the technicals to your fundamentals. This is really important. So I've got a little picture there of oil, and this particular time in oil is Trump said the oil prices are too high. It broke through that trend line. So I just wanted to give you an idea. It's basically a game of which currency will win, which currency will perform better. So that's how we basically measure matching technicals versus fundamentals. Will the data come out that will make the price go higher or make the price go lower? We want to trade euro versus the dollar. Which ones will perform better, which ones will perform worse? And you do that by matching your technicals to your fundamentals and seeing which ones will move the currency and which ones will not move the currency. And you have to decide that on a day-to-day basis based on technicals and fundamentals. Market consensus is key. We discussed this in a couple of the previous episodes. So we want to know on the theme, do people expect the trade deal to be done? At the moment, they don't. So if the trade deal does get done, you'll see a massive spike lower in gold, something like that, for example. So you need to match your market consensus to the news that's coming out with the technicals and fundamentals. Surprise results often get the biggest moves, so I just mentioned that just now. So the stuff with the trade deal, people don't expect it to get done. So if it does get done, it will have a big move. Brexit was another one. Trump being elected was another one. The surprise things often make you the most money. So be aware of surprises and expect them. Example of this, so SNB, when they removed the floor of their interest rate peg, the Swiss franc just absolutely absolutely strengthened so quickly. So dollar Swiss just hit the floor. Elections always change. Brexit vote was another one. And how analyst consensus are made. So I want to explain this. So basically on each data point they'll do a survey of maybe 100 analysts on Bloomberg or Reuters. They'll put these together, they'll average them out, and that's how the consensus estimates are made. Match those obviously with the trend lines and support and resistance levels. So know if something breaks consensus, it will break through the support or the resistance level. And the speakers on the day, so there's so many central bank speakers, it's going to be very difficult for me to name them all for you right now, but you need to know who's speaking, where, when and why, and the importance of their talk. And it's normally on the calendar, so you can see them every day. Now, this is the end of it, so making a trading plan out of this. So how much risk per trade? I always recommend 1% risk on your account balance per trade, and this could be maybe 1 to 3%, depending on how much strength you have in your conviction at the time. But this ensures that you stay in the game if you make this wrong. Now, this is also key. What's your success rate? Are you 50% right, 50% wrong? But do your winners make you slightly more than your losers? That's how you know you'll be a successful trader over a certain period of time. Now, this is something that every single trader I know has disregarded at one time or another. How many trades in a row could you possibly get wrong? So there's sometimes in some traders' lives where they'll get 20 trades in a row wrong. Do you have enough money to cover that? Is your worst case scenario 7 trades in a row wrong, 10 trades in a row wrong? How do you work this out? How far can you let your profits ride? So this is more of a patience thing, and also how strong your mental conviction is how much, can you let your winners go to see how much money you can squeeze out of the market. That's a tough thing. And also give yourself the best chances of success by managing your risk around key events. And what I mean by giving yourself the best chance of success is basically never over leverage, and also keep your money management rules perfect and in line. That they're two really key things. Don't put 50% of your account balance on one trade, because then you've only got 2 trades to make your money. Trading doesn't work like that. It's a long-term game based on fixed percentages and the probability of you winning. So you have to give yourself the best chance of success by managing your trade sizes, but also making sure your rewards, slightly higher than what you're risking, and constantly having a slightly better win rate than your loss rate. There's times that I know of that traders who are only 30% right, but their 30% of their winners are so much bigger than all of their losers that they still make money. So you have to think about that. What kind of trader are you? Are you a 50-50 trader with a win-loss ratio, but your winners are slightly bigger? Or do you lose most of your trades? Do you lose 70% of your trades, but the 30% you do win big? You have to decide that. That's part of your plan. And doing this with fundamentals is key, because let's say, for example, you hear a good piece of data or you hear a good piece of news and you jump in. You need to know, how will that price take you to your level, and how much do you have to risk for you to get to that level? Have you left yourself enough space on the downside for it not to get stopped out? These are all really, really important questions. So lastly, the one was managing your risk around key events, and that's like if interest rate decisions are coming out, if big piece of data is coming out, have you got too much in a trade, have you got not enough in a trade? Manage your risk in these trades. Make sure that they're not going to take you out. That's the most important thing.